Well, to understand why the rupee lost its value against the dollar recently, we need to look at both the international factors as well as the local factors. So, internationally, the interest rates are very high in the US for some time, which is keeping the demand for dollar very high, with the with the Fed rate being in the range of 5.25 to 5.5%, which is, by the way, the highest rate in 22 years. So this is attracting investment from all over the world, which basically in turns increases the demand for dollar because investors are getting a good and healthy return without any risk by investing in US treasuries, which are considered the safest investment. So there are also expectations that the rates will remain at the same range for some time or even increase further depending on some other data such as inflation. So this is what has been driving the dollar rate up in the market, international market, and this is also reflected in the US dollar index, which touched a 2 month high of 103.4, I think, recently. And I'll just explain the US dollar index is a measure of the value of US dollar relative to other important international currencies such as British pound or euro or Japanese yen. So it's not just the Pakistani currency which lost value against the dollar recently, but also other major currencies experienced the same depreciation, and especially Japanese yen. So another factor was basically oil prices, which were very volatile this week because there is a negative correlation between oil prices and the dollar rate. So when the markets are choppy, which was the case this week, investors get out of oil market and they also start investing in US Treasury. So this is what has happened. That also kept the demand for dollar very high. Let's talk about the internal factors now. And in Pakistan's case, it is almost always demand versus supply. There's this consistent pressure on the demand side, where there's debt servicing or import payments or generally people needing money to go abroad. And on the flip side, there's short of supply because we are an import dependent country where we spend more on our imports than we earn from other sources of foreign exchange. So this creates basically a negative balance of payment, which keeps the currency under pressure and keeps it vulnerable to any shocks such as a big for foreign payment, foreign debt payment falling due, or importers or surge in import payments, or international oil prices shooting up. So all these factors can influence the currency. So what happened recently? Well, I was reading a few reports, including one on Dawn, which suggests that we made more import payments recently. So that could be one of the reasons why rupee lost its value this week, particularly. In terms of impact on businesses, importers will have to spend more on their imports, whether it's finished goods or raw materials that they use in manufacturing, and that will increase their costs. And to absorb that, they will have to increase prices, which creates inflation. So that's the downside. And in fact, on the flip side, it is quite possible that they will not be able to increase prices under the current environment where inflation is already running very high, like in high 20s, because there's this risk of losing consumer or market share if you increase prices where when the inflation is already very high. So it's a double whammy for businesses. On one hand, they will be making expensive products because their costs have gone up, and on the other side, they'll not be able to sell them on higher prices. So they will get hit on both sides. And besides that, businesses, not just importers, other businesses as well, they will see their costs going up because expensive dollar means expensive fuel, and expensive fuel means that your cost will go up because every business uses electricity, and logistics is an important part of the supply chain for every business, and transportation costs will rise as well. So this creates inflation across the economy. So that is the downside of an expensive dollar. Will we see the rates hitting 350 to a dollar by December? To be honest, nobody can answer this question. I mean, nobody knows whether it'll be 350 to a dollar in December or even 400. This might even recover, stabilize, and then recover or fall back to 275 or 280 to a dollar. Nobody can tell that. But you can study the factors that push the rates up or down, just like those I mentioned previously, and tell the direction it may take. And this brings me to your next question about near-term recovery of the rupee against the dollar. So that depends on various factors. Again, going back to the Fed rates, will it increase the rate further? If it does so, obviously there'll be pressure on other currencies because the demand for the dollar will increase. Whether it keeps unchanged, even in that case, it may still remain, at the same level. So, or might stabilize, but may not fall. And again, we have to see what the trends in the oil markets, whether it remains volatile. There are reports suggesting that the oil prices might fall, which may indicate that there will be more capital flowing into the US Treasury. And again, this will this will result in higher demand for the US dollar. But what if the prices stabilize or increase? So we'll have to monitor these news. And besides that, there's a change of leadership in Islamabad, like Dr. Shamshad Akhtar is, I think, is taking charge as new caretaker finance minister. So one has to see her policies, whether she comes up with any new directives such as controls on imports, for example. That also, will sort of influence the prices, I think. Um, and again, there are other factors such as how much foreign debt servicing is due in the next few months. Are there any big payments falling due which will keep the currency under pressure? Again, will there be more import payments required in the next few months? So all of these factors will play out in terms of whether the rupee stabilizes at its current level or depreciates even further. So, but then again, as I mentioned in one of your previous reports, um, we need to address our core issues because the recent stabilization in the rupee after the IMF agreement was signed was temporary, and we can't really come out of this mess unless we address the core issues, which is our negative balance of payment. And we have to reduce our dependence on imported fuel or imported food. We need to invest in our agriculture overall, that sector, so that we can become food secure. We don't have to spend dollars on some basic foods items, and we have to come up with import substitutes so we can save money that we spend on our imports. That's how basically we can address the core issue and uh, you know ease pressure of our currency.